In this video, we're going to talk about the three different areas in the GTA and how they're performing relative to each other. 416, 905 inner, and 905 outer. Let's get into it. Hi, my name is Vas, and I'm a chartered professional accountant turned realtor that's built and invested in real estate right here in New York region, Toronto, and in secondary markets. I'm sure you've heard by now, prices are in free fall across the entire GTA. What is going to happen? Now, there is a lot of skewed information out there simply because we're coming off some peak highs and a lot of unseasonal information where spring markets were pulled forward or there were no fall or spring markets like we usually would have pre-COVID. So with that, it makes it very confusing to understand, well, if prices are up month over month, is that because of seasonality? Is that because it's a new trend? Is it COVID? What is it? That out of the way, we know prices are going down. We know they're going down fast. However, it is unclear what it all means on the ground floor in terms of when does this end? And more important of all, how do the areas that appreciated the most, which is the outer 905, all the faraway towns, all the faraway cities, how they appreciated much faster than everything else? Now let's see, as prices are coming down, how this is all unwinding and what is happening in the outer 905 versus the 905 proper, and then 416. For reference and full transparency, I'm not using any sort of definition for inner 905 aside from just common sense. What I'll show you here is this is what I would consider outer 905. So anything outside of Oakville, Mississauga, Brampton, and north of Newmarket, and Oshawa, and east of Oshawa. So that to me, right here, is outer 905. Inner 905 are your typical subjects, which is Mississauga, Brampton, Vaughan, Richmond Hill, Markham, Aurora, Pickering, Stouffville, Whitby, which is covered right here in this map, and then Toronto is Toronto. For this comparison, we're going to use a website that I really like for quick analytics like this that are on the ground numbers, and it's called Broker Bay. We're looking at the last 50 days for this purpose. We can ignore this last day where it drops to zero. The data is not in. It usually takes a day or two for it to upload. So we're going to stop our analysis right here on May 5th, and we're going back 47 days. The reason I've kept it under 50, with Broker Bay, if you go further out, you do not get the granularity of daily data. It becomes weekly, and then we don't see the seasonality in the week-to-week changes as they happen. As I had already explained, outer 905, we know what that region is, inner 905, and then Toronto. What we're seeing here is a gradual decrease in showings across the board, and while they're all decreasing at a similar pace on a percentage basis, they're actually decreasing at different rates, and we're going to get to that in a second. One thing to note, I found out after I had done this analysis, is this was an outlier for York region or inner 905 where we had peak showings for whatever reason. Anything prior to this data point was actually around here, so this is an outlier. We're going to correct for it in the data later. As you can see, everything is decreasing on a relative basis, and the same thing can be said about offers. Again, we had peak offers in inner 905. I'm not sure why this happened. We're going to account for this in our analysis as we're trying to figure out the actual relative percentage drops as we move from April into May. Looking at this data at face value, it appears that inner 905, which is the green line right here, had the biggest drop on a percentage basis. It would mean here that we were looking at roughly 50% less in the way of offers since end of March. And that is already a month where we had a decrease because we had a steady decrease in offers and showings throughout the entire month of March. So that's another 50% decrease on what was already a very slow month. In terms of showings, the story is pretty much the same, except we're looking at a drop of, and for example, in inner 905 of roughly 40%. What I had realized is that this week right here on March 25th was an anomaly, so we had to make some adjustments to the data. Now let's compare the adjusted data versus the unadjusted data and look at our conclusions. On an unadjusted basis, inner 905 appeared like the worst performer. However, once you take into account the anomaly where they had a spike the end of March, it is actually the outer 905 that is the worst performer, where showings dropped almost 40% and offers dropped close to 50%, whereas inner 905 and 416 showings dropped 28 to 27% and offers dropped between 26% and 42%, which is still significant, especially for Toronto. The punchline here is that inner 905 actually performed the best in the last 50 days, and I think that is because they suffered from the biggest drop from when this decline began, which was the end of February. When the declines happened, and they happened really fast, and they were very aggressive in New York region, not as fast in the outer 905 in Toronto. Toronto was holding fairly steady, and it looks like now Toronto is being affected and outer 905 is affected even more. What I can say anecdotally from my own experience right now, showings do appear to be going back up. In real estate, weather is a big influencer. So it is finally sunny, winter is behind us, and we're not in full summer swing yet. So people are looking for things to do. Showings are back up. So it's a bit of a reassurance that at least people are looking. I can tell you that there are buyers out there. It's just nobody wants to be the one catching the falling knife. So everybody's sitting on the sidelines, but there are a lot of buyers. It just everybody's looking for that deal. If you have any specific questions about this data, or you would like to see something in addition to this, please let me know in the comments below, and I'd be more than happy to put something together. Thank you.